We're live, everybody. Welcome in. It is Friday, October 27th, 2:30 p.m. Central. Thank you so much for joining me today. We're almost at Halloween. A lot of spooky stuff happening right now. A lot of my, on the front of mind right now, I want to discuss with y'all. Lots of stuff happening in the auto market as of late. We've had a lot of news this week about slowing EV demand, legacy automakers delaying, backing out of deals regarding EVs. Just so much noise, so much stuff happening. And I want to make a video to put all my thoughts together in one. Hopefully it comes out okay. We will find out. Sometimes it doesn't, but we'll give it our best shot. So I want to start with some news articles I've been reading this week. So this is a piece from Insider. Auto execs are coming clean. EVs aren't working is the headline. At earnings this week, several auto execs pulled back on EV targets, includes Ford, GMs, and others. Dealers have been warning of slowing EV demand for months. This is legacy EV dealers, things like dealership network for Ford and GM, etc. This is a pretty brutal space, says Mercedes-Benz's CFO this week. Another article that was published this week, this one is by the Wall Street Journal. GM scales back EV plans as buyers hesitate. General Motors is abandoning a self-imposed target to build 400,000 electric vehicles by mid-2024, the latest sign that the automakers are concerned about the viability of the market for battery-powered cars. Cool. Here's another piece from Business Insider, everybody's favorite publication. Ford pauses a $12 billion EV investment after saying electric vehicles are too expensive. Ford has postponed $12 billion in spending on EV manufacturing. The company has warned that electric vehicles are too expensive and that demand is slowing. Other automakers are also cutting investment and abandoning manufacturing targets. Now, props to Ford, in my opinion, for actually calling out exactly what the deal is here, in my opinion. The company has warned that electric vehicles are too expensive and the demand is slowing. This is backed up again from the expensive piece, right? Because we have to think about expensive means, let me bring myself here. Expensive means that I'm making a car in the hopes that I'm making a profit because I'm a business. And if they are too expensive, it means that I can't make it cheaper and be profitable at the same time, right? So when a company says our products are too expensive, that's what it really means. It means that we can't make a cheaper product that's more that's profitable, that I can at the very least break even, but it can bring in money, right? So Ford posted their earnings yesterday. And if we look at their EV performance, and again, Ford is a barometer for us for the legacy auto market, we can see that there was some very modest growth in EV. But again, those EV losses are growing as they're investing more and more time and energy into the electric vehicle growth. So their earnings came in at negative $1.3 billion for the quarter for the electric vehicle segment. That's almost 76% EBIT margin. Net profit margin is a good way of thinking about it. And the revenue is down very, very slightly. It's flat to down, which means that their average selling prices are down sequentially quarter over quarter, right? So what this means, this is a very clear picture, and this is sort of what Ford has highlighted, is that as they're growing into the EV market, their losses are going to continue to get bigger. And this is normal for any automaker. But now there's this sort of narrative, and this is what I find really fascinating, is we've gone from a narrative of the competition is coming to, oh wait, people might not want EVs. It happened overnight almost. I don't know if maybe I'm misreading what I'm seeing out there. You tell me if you're seeing the same thing. But it seemed like the sudden shift from competition's coming to, oh wait, no, never mind. EVs, nah, slow down, chill out, right? So I want to show you something else here. This is a comment from Ford's CEO, Jim Farley, on yesterday's call. Ford's CEO on Tesla, and this sort of gives additional color as to what's, I think, truly going on. A great product is not enough in the EV business anymore. We have to be totally competitive on cost, but Tesla and Elon Musk have provided a silver lining for the company. Tesla actually gave us a huge gift with the laser focus on cost and scaling of the Model Y. They set the standard, they set the standard, and we are now making real progress on our second and third cycle EVs that are in the midst of being developed today as we get closer to the introduction. So there's some commentary here from the CEO of Ford that says, hey, we understand that the key piece here that's not allowing us to grow in our EV space is affordability. is being able to have a cheap car or a relatively cheap car that we can make money on. And that's one of the main reasons why they're delaying that $12 billion investment, because they're trying to figure out how to get their next two Gen vehicles, their Gen 2 and Gen 3 vehicles, to actually fit within the mold that Jim just described here. Something that's affordable, that's also profitable, right? Now, during the same exact time period that we see pieces about, hey, EV demand is lessening. There's not as many EVs being sold. There's a problem with the consumer when it comes to EV. A bunch of different variables that folks are throwing out around EVs. Same exact year, same exact quarter. We also have data points like Tesla dominated U.S. EV market in the third quarter with 50% share. A segment experiences 50% year-over-year growth over last year. Tesla Model Y breaks record in Denmark on its way to being the world's best-selling car. The Tesla Model Y is on its way to be the best-selling car in the world, period, in 2023, an electric vehicle. And then if we look at Tesla's quarterly sales from previous year, second quarter, to this year, the third quarter, you still see growth, right? This third quarter, I think this is what's kind of freaking everybody out right now in the car market, because there is some level of softness. Now, the key thing to keep in mind here for the third quarter is that this was when Tesla shut down its Austin factory and was retooling it. And the fourth quarter, from the way the company was guiding, is that it's going to reach close to 475,000, 480,000 vehicles, which will be its best quarter ever, breaking a record, and allowing the company to reach its 1.8 million car target for the year, which is a 500,000 unit increase over the last year, 1.3 million. Now, it's not the 50% growth that Tesla was guiding towards. It's closer to 40% growth, whatever that math is, right? And I think that's where a lot of things are being mixed up right now as it pertains to EVs, all right? The one thing that is not being included in this conversation when it comes to quote unquote lessening EV demand, which is coming from legacy automakers, is that the effects of higher interest rates and economic conditions that make it more difficult to afford, say, an expensive product are obviously becoming restrictive in a way, and it's impacting even companies like Tesla, right? Tesla, the only way it was able to achieve that growth is by lowering the price. They started the end of last year at somewhere up here, and then they had to lower the price of their cars sometimes as much as 30% in some areas, in some cars, to be able to reach the growth that they have this year. But the reason they were able to do that is because they're profitable. They're actually making money on those cars. So they were able to lower the price for those vehicles all the way down, which is allowing them to still grow. Legacy automakers do not have that luxury from where I stand. They do not have the luxury of saying, okay, for us to remain competitive in an economic condition place that has higher interest rates, and we have record high household debt, and we have all these different variables impacting our ability to sell cars, does a Ford or a GM or a VW or whoever else, Toyota, whoever, do they have the ability to lower their price and stay competitive with a player like Tesla or say BYD out of China and still remain profitable? And obviously the answer is no. Otherwise, you wouldn't have a graph like this from Ford, where as they're growing their EVs, their losses are getting bigger, right? And the way I'm reading this is the reason why we're getting this sort of, let's say, rhetoric from the legacy automakers, and the reason why the media is reporting this EV thing as, hey, EVs are no longer people don't want them anymore. It's an issue. People don't want them anymore. It's because legacy automakers do not have the right incentive structure set up as a business, as an organization, to actually achieve affordable electric vehicles that people actually want profitably. And the reason why is, if you think about it very, very simply, executives and most people that work at these companies, and I'm not calling them good people or bad people, I'm just saying this is the incentive structure. Most of these folks, a large percentage of their compensation is based in stock. And the stock is really the thing that's giving them, 50, 60, 70, 80% of their salaries over time, right? And most of the investor base for companies like Ford and legacy automakers are there not because they're going to grow long term. It's because they have things like dividends. It's because they have things that are like a secure return they can count on every single year, which requires them to ensure that their profits are as as well managed as possible so that they don't get themselves in a situation where they're like, yo, us betting on the farm on electric vehicles is going to really eat into our profits, which means we may have to cancel dividends, which means that you may have to sell the stock because you're in the stock for that reason. And then what happens to the stock? People sell, because then that dividend goes away, right? So that's one of the forcing functions I think that's causing a lot of the rhetoric coming out of the legacy automakers, is that they're not in a position to sell affordable electric vehicles that people actually want. And so instead of betting the farm and going that way, because again, this graph really shows just how expensive it is to get an EV business up and running, they would rather say, let's delay. Let's continue selling the gas cars. We know we're profitable on the gas cars. We know that's going to keep the stock price where it should be. We know we'll be able to return dividends to our investors. Let's not mess with it, especially when we're in an uncertain economic environment where interest rates are going up and there's record household debt, and who knows what's going on with the economy, in addition to the UAW strikes, which impacted companies like Ford, GM, and Stellantis. Ford made a deal yesterday. GM is close to a deal with them, I think, sometime today. And then Stellantis, who knows what they're up to. So I just wanted to sort of highlight a little bit of that dynamic, right? Now, the reason why I'm so confident in saying that the key missing piece here when it comes to there is no EV demand is cheap, affordable cars, and profitable cars, is because there's data out there that heavily supports this. And I want to bring up a couple graphs that back this up. So this is a study from PwC, Cooper, that surveyed 12,000, 13,000 respondents around the globe. And one of the questions was, let me give you the headline. It wasn't a question, it was a statement. Consumers have been grouped into three main clusters with three regions: EV owners, EV prospects, and EV skeptics. So out of the 13,000 people, they're in three groups. EV owners constitute about 6% of it, which is sort of proportional to how many people in, let's say, first world countries or Western nations have access to, not really first world countries, because they have APAC in here as well. Just people that can afford electric vehicles or be in a similar enough price bracket. 6% of them total are EV owners. 62% of them are EV prospects, which is defined as people who have declared their intention to buy an electric vehicle in the next 5 years. And then 32% of them are EV skeptics, meaning that they're not looking to buy an EV in the next 5 years. So if we look at this just very simply, there's 62% of people out there that are looking to consider by purchasing an EV in the next 5 years. So there's a huge bucket out there that clearly wants EVs. And if we go a little bit further into what are the key things that people look for when they purchase an EV, so low operating costs, convenience, and reduced environment impact are key drivers when considering the purchase of an EV. When the question is asked, what's the main reason that drive you to buy an EV? 72% of respondents in North America, as an example, say cost. 72%. Then 44% is convenience, and then the environment is 36%. This like green movement thing appears to be a much lower priority for people looking to buy an EV than this first one, which is cost, right? And if we go into a different graph here, what type of car would you buy out of those people that are prospective EV buyers? 51% of them in North America, C segment compact, 18% sub-segment, subcompact, mini compact, and then 22 and 5% are in this segment, which is the mid-size, large, and luxury, right? And so the question becomes, how many EVs are out there that actually fit this giant bucket that hasn't been served yet, which is primarily driven by cost? And the answer is not that many. Very, very, very few. Outside of China, outside of some of these very small manufacturers that make these little tiny EVs, most of them don't have access to affordable, compact, subcompact type vehicles that people can actually afford. There was another, I'll save this for another video. There was another comment that was made from Brian Sullivan here. So Brian Sullivan is, he works at CNBC. One of the few folks that seems to be understanding this EV dynamic a little bit. Back in July, he made a post. Dare I not call it tweet? Car companies are waking up to the fact that most buyers don't want an EV, they want a Tesla. And then somebody said prescient, I don't know how to pronounce it correctly, based on a post that he made. Wow, GM suddenly abandons EV goals. Nothing to do with the strike. Guessing others follow as customers revolt and political winds possibly shift. And then he said, have to go on the what the reporting tells me, even if some don't dig it. So here's a person that's part of the mainstream media from CNBC who seems to understand what is happening. And the reason why I'm so worked up in this video, I'm sure you can tell what the hell, how much coffee did you have before this video? Zero. I had 1 cup of coffee. What was it? 8 o'clock this morning. So the caffeine's probably all gone. But it does work me up because it's just fascinating to see how quickly narratives can change when a company's product is not actually meeting what the customer is looking for, and they're using that as an excuse that the customer isn't there, when in reality it's the product that they're selling that isn't there. And I think that's what's happening with players like Ford, GM, Stellantis, VW, Mercedes, so on and so forth. They're thinking that their product is not wanted by the public because they don't want EVs. But if that's impossible, I think, if the best-selling car in the world is an EV, when you have separate studies, even outside of PwC, Cooper, that says, hey, there's a ton of people out there that want an EV that's just not affordable enough and not cheap enough. And other variables as well that prove that, hey, EVs work. Tesla wouldn't be growing year over year if there wasn't some level of demand, especially when they're not even advertising in places like the United States yet. They're going to start advertising probably soon. So there's a lot of variables there. And then the whole conversation around the economic impact, higher interest rates, record household debt, the fact that if you go to any dealership network and you look at how they're trying to sell cars, they went from having no cars in inventory to some brands being flooded with inventory, and they're running crazy promotions on those cars that will not filter through to the car makers, the manufacturers, until later in the cycle, because you have that dealership network that's buffering the price action between the manufacturer and the dealer. And that's another thing that doesn't get discussed, that the impact to these manufacturers is going to be delayed. Not to also mention that a lot of these legacy automakers, they've been relying heavily on selling to fleet customers instead of direct to consumer, or let's say to the dealership network that sells to the customer directly, because again, those are customers that haven't had inventory for a really long time. And as that gets depleted, they're running into the situation where it's, okay, we need to figure out how to manage the inventory, right? So I don't know. There's just a lot of signals out there that point to it's the rhetoric, the narrative of there's no EV demand. I just think it's completely misplaced. And I just find it so fascinating that in the span of 1 to 2 weeks, the UAW going to strike, then these automakers on the third quarter earnings calls, they start claiming that electric vehicle demand is not there. It happens so fast. It happens so quickly. And so, of course, that makes my sort of radar go off and be like, okay, what's truly going on? Now, I think there are legitimate concerns around affordability of electric vehicles and ensuring that there is enough, that a company has enough of an ability to bring the cost down so that more people can afford it, which explains Tesla's price action, which explains why they've sort of moved away from 50% growth to 30% to 40%. But it's not an EV demand issue. It's a price issue. It's an economy issue. It's an interest rate issue, in my opinion. So I want you guys to tell me where I went wrong, why I'm incorrect, why I should be rethinking this. I want you guys to tell me how I should shift the way I'm thinking about this, because this is how I'm seeing it right now. Just because it's expensive to buy an EV, here's another thing to keep in mind. Majority of EVs are in a price bracket that is unattainable by a humongous percentage of the population. Most people, a huge majority of people, can't even afford a new car, regardless of what new car it is. So when you think about interest rates going up, those cars that are in the higher price brackets are going to be disproportionately impacted by restrictive economic conditions versus, say, a used gas car that you can sell for $10,000, $15,000, even if you can find one, right? So that also gets lost in this entire conversation, and it turns into, see, we told you, EVs, people don't even want EVs, not 2 weeks after everybody was saying the competition is coming. So, okay, I feel better. I'm going to end it there. Have a great weekend. Happy Friday, and I'll see you on Monday. I love you very much. Take care. Bye-bye.